Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates and digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 1:30 and 7 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Well, ladies and gentlemen, XRP, gold, silver, and copper just got a massive signal from a world power, and not many people are really paying attention to this. Over the past few weeks, we've just lived through one of the most aggressive and confusing periods the markets have seen in a long time. Crypto has been hit hard. Commodities are starting to move in ways most people aren't paying attention to. And a lot of investors are asking the same question right now. Is this over, or is it something much bigger unfolding behind the scenes? Because here's the thing. This sell-off shouldn't be happening the way that it is. And historically, moments like this are dangerous, not because everything is falling apart, but because people assume it is. Back in 2009, when markets were still bleeding after the financial crisis, most people thought the system was broken beyond repair. Meanwhile, the foundation for the longest bull market in history is quietly being poured. Most people didn't see it because it wasn't loud. Markets don't do this by accident. Here's something even crazier. XRP hasn't just been another asset in the market. Since day one, it has been watched, debated, and influenced by some of the most powerful people in finance and government. Later in this video, I'll explain exactly what that means and why it matters for what's happening right now. In today's video, I want to zoom out. I want to walk through what's happening with XRP, how it connects to gold, silver, and copper, and why a major world power just sent a signal that most people completely missed. And later in this video, I'll even explain why historically, the quietest signals are usually the ones that matter the most. So if you're still here, still watching, still trying to understand instead of panic, you'll be exactly where you need to be. As always, I want to thank everyone that takes the time to like, subscribe, and comment. Liking and subscribing and commenting really do help me out very much. So I want to thank everyone for that. Let's get into it today. Let's break this down. Why this move doesn't add up. Let's start with what we all just lived through. We've seen one of the most aggressive liquidation phases in recent market history. Positions wiped out, leverage flushed, forced selling everywhere you look, margin calls. But here's what doesn't make sense, at least to me. Normally, moves like this come with a clear villain. FTX had a villain. 2008 had a villain. Even the COVID crash had a villain. This time, no clear enemy, no villain. It reminds me of late 2018. Markets were collapsing, fear was everywhere, and yet nothing was actually broken. It was a positioning reset, not a fundamental collapse. That's the moment smart money starts asking a different question. If nothing is broken, why is everyone panicking? Because when price action and fundamentals disconnect this aggressively, that's not noise, ladies and gentlemen, that's structure. I want to talk about the leverage story most people misunderstand. When markets stop making sense, the next place you look is positioning. And this is where things start to click. As price dropped, leverage didn't unwind, it collapsed. This is exactly what happened during the 2013 gold correction. Gold didn't fall because everyone suddenly hated gold. It fell because leverage had built up too fast, and the system needed to reset before the next phase. That's what forced liquidations do. They don't change belief, they change ownership. Now, when you look at crypto today, almost all leverage longs are gone. What's left is spot holders, people who aren't forced to sell. And that's important, because forced selling ends suddenly. Voluntary selling fades slowly. Markets don't do this by accident. I want to talk about what XRP is telling us now. Now let's talk about XRP. On the surface, XRP looks weak, but context matters, ladies and gentlemen. Think back to Amazon in the early 2000s. After the dot-com crash, Amazon lost over 90% of its value. Most people thought it was finished. But while price collapsed, the business quietly improved. XRP feels similar right now against Bitcoin. XRP is holding structure. It's not bleeding the way it historically would during panic. That tells us something subtle, but important. XRP isn't being treated like a lottery ticket right now, ladies and gentlemen. It's being treated like infrastructure waiting for its moment. That's not noise. That's structure. Let that sink in. Ladies and gentlemen, I want to talk about the powerful people thread. Here's the part most people don't realize. Since XRP's inception, some of the most influential people in finance, technology, and government have had their eyes glued to it. Emails circulated among top financial executives. Debates were held in political and tech circles about its potential. There were active discussions about how to slow it down, manage its adoption, or influence its trajectory. This wasn't speculation. This was deliberate oversight from day one. Think about it, like the early days of the Federal Reserve. Back then, they didn't announce policies in headlines. They worked quietly behind the scenes, shaping the system before anyone realized what was happening. XRP has been under similar, quiet supervision, influencing its trajectory without most of the market even knowing. And here's the kicker. While everyone was panicking over short-term price moves, these forces were already thinking 5 to 10 years ahead. That's the kind of perspective most retail investors never see. Ladies and gentlemen, pay attention to what's quiet. While most people were glued to crypto charts, something else was happening quietly. Gold stabilized. Silver stopped breaking down. Copper refused to collapse. This exact setup appeared in the early 1970s, just before the U.S. moved off the gold standard. Commodities began acting strangely before anyone understood why. Copper is especially important. They don't call it Dr. Copper for nothing. Copper doesn't speculate, ladies and gentlemen. It signals. So when copper holds firm during stress, it's often because infrastructure demand is being planned, not canceled. This is really important. Remember that. Overlay this with XRP's positioning and leverage cleared from the system, you start seeing a pattern. Quiet strength, patience, structural preparation. That's where the real signals lie. Ladies and gentlemen, I want to talk about the world power signal. World powers don't announce transitions, ladies and gentlemen. They prepare them quietly. In the 1940s, the Bretton Woods system wasn't revealed overnight. It was built behind closed doors, while the public focused on chaos. Similarly, a major geopolitical power has been repositioning around settlement, commodities, and cross-border flows. Silently, structurally, and deliberately. And combined with the XRP leverage reset, the metals behavior and quiet accumulation, it's clear. Markets don't do this by accident, ladies and gentlemen. They don't. Well, if you made it this far, it's time for the candy from the Italian ice. Happy Monday, everybody. Hope everyone had a great weekend. I want to go over 3 topics, 4 to 5. I'm going to weave all this in. This is a part 1 of a multi-part series we're going to make on this because there's just no way I can get all this in 25 to 30 minutes, and we're trying to cut the videos shorter. So with that being said, I'm going to talk about the 3 to 5 things that everyone should be paying attention to, at least in my professional opinion. This is not financial advice. This is just my opinion. Anyone that retains myself or our organization, any capacity, this is our opinions, okay? So first, I want to talk about how there's no top, there's no exhaustion, why gold and silver miners remain nearly or early in a structural bull market, despite Friday's sell-off and massacre, how many people got cut up like sushi taken out in body bags. Number 2, Beijing says out loud, Xi Jinping formally elevates the renminbi from internationalization to explicit reserve currency ambition. It wants to join the club of the other reserve currencies. It finally wants to join the club and be one of the reserve currencies. It's got ambition. It's pretty significant. This is massive. And for the geoeconomic and geopolitical things we've been harping on for the last few weeks, there you go. Here it is. The third one is the silver market shock event that we precipitated what was being digested over the last 72 hours. Okay. A Chinese-listed UBS silver fund halt collides with global futures market, exposing who really sets the price, in our opinion. Momentum structures across gold, silver, and miners remain fresh intact. Relative performance leadership is intact, and key silver breakouts are holding. Again, volatility is treated as internal strength, ladies and gentlemen, not distribution. I spent the better part of a time abroad at a family office over the weekend going over all of this. So if you can digest this, please do. Please ask all the questions you can in the comments, and I'll try to get to this. And on Patreon, I'm going all over this, and this is why people retain us. And this is why I am a financial mercenary my entire existence, and why people retain us, and why we don't get cut up like sushi, and why from some of the events that we have been harping on for the last months. And again, we told you that gold was going to drop before anybody had any inclination, because we shorted gold into that for people. We did, because we put our reputations on the line all the time. Ladies and gentlemen, this is actually kind of earth-shattering at the geopolitical level. Xi Jinping makes the RMB reserve currency push official. China has shifted from implicit RMB internationalization to implicit to be a reserve currency along with the others. In a newly published remarks dated to 2024, Xi Jinping outlined the institutional, financial, and governance foundations required for RMB reserve status. This move signals long-term strategic intent, let this sink in, rather than the near-term dollar replacement framed with a multipolar monetary system emerging under global financial stress. It's massive. Again, so in English, the RMB wants to be a reserve currency. It wants to be right along the euro, the dollar. Okay, that's what that is why they've been hoarding gold. That is why a lot of these things, I'm going to tie it all in together. Stay with me, okay? They want to be right next to the euro and the dollar. All three of those are currencies that need to be held in reserve. Now, this is our contention, and it's very important. The attraction to the dollar is backed by the full faith and credit of the United States government. The attraction to the euro is something very similar. What is the attraction to the yuan? Well, why would I want another fiat to balance my reserve currencies, you're probably asking? The answer is this. It's not fiat. It's going to be backed with implicit gold and fiat backing. And you can see that in the yuan strengthening against the dollar slowly and orderly over the past several months. And that's a reaction to the yuan strengthening against or weakening against gold, which means that they're buying gold with their own yuan makes their currency an alternative. Their currencies are pure, will become, if they get it right, a pure hedge to the dollar. There'll be a place at the table for the Chinese currency because of the internationalization that comes about from their tying of their currency to gold, as we have been predicting since 2022 and proved most recently in May of 2025 with their nodes and their vaults and the bricks using the unit. It's all out there, ladies and gentlemen. The third story, this is serious stuff. And for them to release it now, 2 years after discussing it, it tells you there's a lot more going on behind the scenes than you and I know, okay? Why I'm harping on this, ladies and gentlemen, this is so important. Why do you think China was hoarding all the gold that they were doing for so long? Lying about how much they were buying, the BRICS unit, half of it being tied to gold. This is massive. They came out. I don't hear legacy media talking about this. This is massive. This is them challenging, saying, look, guys, we want a seat at the table. We're backed by gold, something real, not the full faith of IOUs. Let's keep on moving. The story that precipitated the silver fall, even though it isn't being framed this way, and this is massive. This is what's going on. Ladies and gentlemen, an emergency halt of a UBS China fund tied to global sell-off. China's Shenzhen exchange froze trading in the UBS SDIC silver long-only fund amid extreme premiums and volatility, coinciding with a sharp global sell-off and higher CME group margin requirements. Coordinated the move displayed stress into the futures market, reinforcing the Shanghai-driven interventions now materially influence global silver price discovery. The fact of the matter is, the SDIC fund is a long-only fund, and being a long-only fund, you cannot short it. And if you cannot short it, then you cannot arbitrage it. So every time silver goes up 1%, the fund can go up more than 1 percentage point because you can't short it. You can't short it and arbitrage. You can't short the fund and buy the futures because it's not arbitrageable. I repeated that. Because it's not a physical fund, ladies and gentlemen. It's a futures fund. Now, that creates funneling effect. Anyone who has an account at the Shenzhen but not at the Shanghai will throw their money into that instead. So you have what is essentially a derivatives product, a shell or a wrapper on a futures product, which is a wrapper on a spot product. Now, did China know that they had a product that did this? Of course they did. This is a product created, in our opinion, so you can do something like that. So you can capture demand without funneling it out of the country, without driving price. And now it's no longer serving its purpose because now China wants to buy more silver. China needs to buy more silver. China has put out its national saying, stop buying silver, ladies and gentlemen. Start buying gold. And just the fact that China is getting squeezed out of their long-term supply chains in Latin America by the U.S., Europe is concerned about it. It's crazy, you know. Everyone is concerned about this because of what's happening. Ladies and gentlemen, in the U.S., we have plenty of raw material, okay, but limited capacity created. And in China, they have plenty of capacity, but no raw material coming in from Latin America anymore. And so therefore, their industrial demand is not being satisfied because they're worried about their future. And solar panels are a big part of their economy, ladies and gentlemen. 85% of solar panels in Europe come from China. Write that down. Geoeconomic warfare, write that down. The other 15%, I think, comes from India. So you shut down that industry, and what have you done? You've shut down a decent part of China's economy. You've hobbled them in a way, okay? So let that sink in for a second. You're going to have to rewind that because I speak very fast, but that's why when I say all the things I'm looking at on the boards in our offices here and abroad, we're watching these stories get attacked one after another. One after another. So it all makes sense to us, but I'm going to keep tying this in again. Ladies and gentlemen, gold plunged 11% and silver crashed 36% on Friday, okay? January 31st, 2026, the worst day for precious metals in over a decade, okay? As President Trump's nomination of Kevin Warsh as Fed chair triggered a $15 trillion liquidation cascade. This is very interesting. JP Morgan closed $10 billion in silver shorts at that exact market bottom, while CME margin hikes forced panicked selling, raising questions about whether this was a natural correction or a systems rescue operation. They got out so close to the bottom, it was unbelievable. We had told you that there was a silver short squeeze going on. Ladies and gentlemen, if you go back and watch some of our previous videos, and everyone who's brand new, welcome to the Patreon, welcome to the Wolf Pack, welcome to becoming a financial mercenary with us. We've been overrun. We're at the front lines with you. You can begin to see all the stories I harp on. They all make sense. If you're writing this down and you're taking notes, this is like watching a soap opera every day. It becomes easy to pick the low-hanging fruit. This is not financial advice. It's just what we're looking for and looking at. Again, as a financial mercenary, you got to get what you got to get. That's it. We're the remora. People are getting cut up like sushi, and we are feasting. We are feasting on this. Again, be excited. Conviction here. So what did I just say? JP Morgan closed $10 billion in silver shorts. System rescue operation. The great liquidation, JP Morgan's $10 billion mystery. Ladies and gentlemen, while mainstream media attributed the crash to Warsh's nomination, what the market is trying to sell today as a natural reaction to the Fed is either intellectually laziness or conscientious disinformation, in my opinion, okay? Silver's drop from 121 to around 78 in a few dozen hours was not a correction. It was a brutal rescue operation of the entire system. In our opinion and our theory, again, this is not financial advice, major investment banks, with JP Morgan leading, had built massive short positions, betting silver's rally was impossible to sustain. But the market didn't cooperate. At 121 per ounce, unrealized losses on these shorts exceeded $10 billion, while JP Morgan alone accounted for over $5 billion. It stopped being a matter of P&L for one bank. It started being a real threat to the CME exchange, clearing stability and systematic domino effect. Risk. Banks had to close shorts, but couldn't do it in normal conditions because buying back contracts would shoot prices to the cosmos. Woo! They needed one thing, pretext, and massive panic supply on the other side. Ladies and gentlemen, I want to talk about demand displacement and demand destruction, okay? In the metals market. Demand falls when access, pricing, or market mechanics break down, even though underlying desire to buy remains. This can be temporary or become structural if disruptions persist. Two failures at once. Gold faces volatility-driven demand displacements as options become unusable. Silver is developing physical supply chain displacement due to refinery bottlenecks, cash constraints, and inventory breakdowns. Market consequences. With risk transfer tools impaired and demand physical channels blocked, participation drops. Price grows unstable with fat tails and speculative positions are exited. Markets are already pricing this as current, not hypothetical. So I want you to understand this phenomenon, okay? It's called demand destruction. Demand destruction occurs when something interferes with the normal functioning of a market such that demand is reduced or delayed, not because people no longer want that product, but because they cannot access it, afford it, or participate in the process as they normally would. In practical terms, it usually shows up when a supply chain breaks. When access to supply is impaired, participation themselves become prohibitive. The mechanics just don't work. There are two very simple real-world examples. The first is a hurricane knocking out power in a city. Factories shut down. When factories shut down, products are not made. When products are not made, wages are not paid. When wages are not paid, people stop spending money. Demand is not destroyed because people no longer want goods. Demand is destroyed because the system that connects labor, production, and consumption has been interrupted. The second example is something like a blizzard or a major snowstorm. If roads are impassable, people cannot get to stores. Costco might have full shelves, but if customers cannot physically get there, demand is effectively destroyed. Again, the desire to buy still exists, but access does not. At its core, demand destruction is a supply chain problem. Either supply itself is disrupted or the pathway between buyers and sellers is impaired. Demand destruction is not permanent by default. It can be temporarily demanded. Temporary demand destruction resolves when the disruption clears. Structural demand destruction occurs when buyers adapt their behavior, find substitutes, or permanently change habits because the system failed for them long enough. That distinction matters because right now we are experiencing two forms of demand destruction simultaneously in the metals market. First one I personally experienced with, that's volatility-driven demand destruction. When volatility becomes too high, markets stop functioning normally. We usually describe this as an overbought condition, but that term is easier to identify in gold than it is in silver. Here's how you can see it in gold. When you buy a call option, it's too expensive. When gold goes up, you make too much money. When you buy a put, you make money when gold goes up and you lose money when gold goes down. That is a clear signal that volatility is overbaked. This is tied to stochastic volatility in a skewed market. I've done academic work on this and traded it. What happens in the option prices rises so much that they become prohibitive. The instruments themselves stop behaving the way that they're supposed to. At that point, outright positions no longer make sense. If you're bullish, you do not buy a call. If you buy a call spread. If you're bearish, you do not sell a call. You sell a call spread. On the put side, if you're bearish, you do not buy a put. You buy a put spread. If you are bullish, you do not sell a put. You sell a put spread. That's demand destruction, ladies and gentlemen, on the option side. The supply chain for risk transfer is broken. Options still exist, but they no longer function as usable tools for market participants. The pricing mechanism itself shuts down participation. The second form of demand destruction is more intuitive, but less common in metals. That is physical and supply chain demand destruction. What we are seeing right now is silver emerging, but it's not fully there yet. What is developing? There are a large number of people attempting to offload junk silver at 90% coinage. And every time market makers quote bids to coin dealers, those bids are immediately hit. That ties up cash. As a result, market makers are becoming cash constrained because they are constantly absorbing metal. Under normal conditions, this is not a problem. Market makers simply send that metal to refineries. Refiners process it, return cash, and then product is created. The loop functions. This is not what's happening right now. Refiners are bottlenecked. They're processing concentrated, higher purity metal for unknown but clear priority clients. Let this sink in. We do not know who the metal is for. It could be for China. It could be the United States. It could be proxies. It could be banks processing for themselves. What matters is that refinery capacity is spoken for. Most refiners, they're not financing metal for at least up to 30 days. They're imposing delays of up to 30 days. This breaks the chain. Market makers cannot get cash back promptly. Refiners cannot take additional feedstock. Coin dealers cannot replenish the inventory. And once it sells out, there you go. Now you have it. Break at three levels: cash flow at the market maker, capacity at the refiner, and inventory at the retail level. If this persists, demand destruction displacement follows. At first, you get panic, shorts panic, buyers panic, people rush to secure supply. You haven't seen that already, but after that phase, demand does not surge. It fades. People get satisfied elsewhere. Maybe they go buy GLD. Maybe they buy SLV. Maybe they buy another financial proxy. The key point is that they stop showing up the physical storefront. A modern analogy is a website outage. If an online business goes down for 24 hours, that is unacceptable. Not only do you lose sales, you lose the habit. Customers find alternatives. They don't necessarily come back. That's the risk facing the industry. And that's a problem. The LBMA failed to address this a many long time ago. So you're seeing at the same time the collapse of U.S. manufacturing infrastructure over the past 30 years. They left the supply chain fragile. What we're seeing right now is consequence of that neglect. I want to get to Dr. Copper. Ladies and gentlemen, with the AI war, I'm hitting with you a lot. If you write this down and you're still here, I salute you. You're going to have to rewind this one. Now we are in PhD class. Now you're learning why a financial mercenary is what a financial mercenary is and why I use analogies. Let's see how many people made it to Dr. Copper. Ladies and gentlemen, in the AI war, silver will transmit electricity better than any metal. So if you can get there faster, weapon systems are better, answers are better, hence silver. I want to talk about Dr. Copper. Copper's price. We watched China influence the price of copper for a long time, up and down, to do what they had to do. But China's solar industry space race. Now, this is my point of view, and this is clearly China trying to get price down so they can buy copper again. They did this version for years in domestic copper and iron ore. Its capital control is pure and simple, but there are several players on the bid now. The idea now is to store solar energy 24 hours a day. Why else would Elon make the comments a couple of weeks ago, okay? This time they're doing it to buy metal for their industry. And I'm sure if you're hearing the rumors are true, gossip mine from industrialists, and we're hearing this over in Asia, okay? China may be looking to build solar panels in space, which makes it more clear now why everyone's hoarding metals, okay? Something like that. The Soviets wanted to do this years ago and tested successfully in the late 1980s, this thing that was called the Znamya project, Z-N-A-M-Y-A project, and the idea then was to use solar to reflect light in the dark and on crops. It worked. Ladies and gentlemen, I just hit you with so much about why you see what it is. So I want you to how I tie this into XRP. And if you're still with me, thank you. This is pure rant, but this is part one. Ladies and gentlemen, XRP is now purely intertwined into the Treasury regime and system, in our opinion. Again, with G Treasury, Ripple Treasury, they're in it. So any attack on the Treasury regime and Treasury market by abroad, they're going to get hit on the chin. They're going to get blasted in the face. Drop to 160, 155 and change. It's dropping right now. We knew that the banking system and regime in the West Side was not going to allow a threat from abroad to challenge them. In my professional opinion, and this is not financial advice, and we just went over all the things about why, that it was calculated about what happened in the last, since Friday, okay? If you rewind this and you go back and you write these things down one at a time, it's going to tell you a picture. XRP is the future. It's about settlement and speed. XRP is it's just there. So now don't get shaken out right here. Don't be over leveraged. If you did, you just learned a lesson when I went about the Machiavellian things, okay? This is so important. China wants their currency to have a seat at the table, to be part of the reserve regime, okay? They have taken gold and they hoarded gold and they've been buying gold for years, lying about it everywhere so they could have their currency not just backed up by fiat, backed up by physical gold. The BRICS unit, half of the valuation will come from gold. Again, so you can see what's happening right here. Why they've been playing with copper? They want to, their whole industry in solar, we went over 85% of solar comes from China. If you hobble that industry by making it too cost-intensive and expensive, it doesn't work anymore. Doesn't work anymore. So this is geoeconomic warfare. The silver market takedown. Copper, what they want to do. Why? Silver and copper moving together. Gold takedown. When things get overboard, I learned this from the best before the Mercantile Exchange. The first bit I learned was gold, getting hit there with cards. And being a financial mercenary, you know what you got to get. There's no honor being a financial mercenary, but you know what? The honor is your bank account gets to grow. Your clients do well. Your reputation grows. That's what a financial mercenary does. We take situations like we just outlaid one after another here, and we explain how they all work together in a concert. So what do you see right now? Xi Jinping says, I want my currency a seat at the table. Attacking on silver, taking it down, hurting them. They're being shut out of silver out of Latin America, disrupts their solar industry, and they're all green, all solar panels. Think about how this all makes sense. It all adds up. At least to me it does. And again, if you want to learn more, come and join our Patreon. We're helping people every day make a difference on their lives. I love chatting with everybody. Welcome everyone to the membership channel. We're going to start having membership videos only this week. This all tells a story in XRP. XRP is the future. It's trading as an institutional asset. It's being bought up. You have people character assassinating this from the highest levels. I'm not mentioning names, but look what they're talking about and why. Everything's changing right now here dramatically. They're never going to come out with a signal flare and say, look, here I am. It's happening in real time. Every day. That's why I told you we've been overrun. And if you're connecting the dots and paying attention, it all leads to one thing. That's where it goes. I tried to take what I said to a very powerful family office and others that they introduced me to over the weekend and consolidate it into 30 minutes. This is part one. Stay tuned for part two. But it's coming, ladies and gentlemen, and you should be DCAing and not getting cut up like sushi, not financial advice. None of this is financial advice. This is just my perspective and my opinion about where things are going and why, and anyone entertains ourselves in our organization, right? Being a financial mercenary means you got to take advantage of everything. I told you when this, and something else to pay attention to, something else, Texas declared an emergency with screw parasites with the cattle. Screw parasites with the cattle. We're going to have to pay attention to that. So, ladies and gentlemen, think about it. The very people who shaped the global financial system have had their eyes on XRP from the very start. They debated it. They tried to control it. They tried to slow it down, and yet here we are. This isn't about hype. This isn't theory. It's documented, influenced the highest levels. Here's the craziest part. While retail investors panic, all the leverage is gone. Metals are quietly stabilizing. XRP is holding its structure. You're watching history unfold. You're seeing a rare moment where everything aligns quietly. The system, the assets, the players behind the scenes. If you're still here, still paying attention, still thinking instead of reacting, you're already ahead of most people. And I appreciate you for that. Years from now, this period won't be remembered for panic. It'll be remembered as preparation. Stay patient, stay grounded. Above all, pay attention to what's quiet. Markets don't do this by accident. That's the noise. That's the structure. We're all a part of it, whether we like it or not. We're witnessing it. You're going to look back one day and you understood what most people missed. Thank you for being here. I appreciate every one of you. Thank you for liking, subscribing, and commenting. If you're brand new here, please do that. Have a great day. Always stay emotionless and watch XRP closely. This could be a defining moment. Ladies and gentlemen, this content is for information and entertainment purposes only. Should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves they'll never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally, because some moments in history are loud, but the ones that change everything are quiet right up until the moment they're not. This is one of those moments. Do not blink, because the world is distracting you with noise, while XLP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes, smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you content, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic. Love you all always.